market pulls back ahead of CPI, and we were all over it. What happens next? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that we were looking for the market to move down in the C wave that we've been talking about toward that 4261 area, and that's exactly what we saw. The market moved down towards 4500 before bouncing slightly at the close, and now we've reached a major decision point before the CPI data. I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, we were looking for a move down yesterday. We got it. We were all over it in our room, day trading it, and doing very well. People are doing well in our room consistently. And if you would like to be part of this winning team and learn how to truly understand the market, stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, here we are on the 1 hour futures chart for the S&P 500. And as I mentioned in yesterday's video, we did move back to the ES1 exclamation point contract, which is the continuous roll, which puts us on the December contract pricing, as September's contract does expire on Friday. So we do want to make sure we have adjusted views on this, but the SPX chart will stay the same, or the SPX levels, they don't move. But one key thing to note, we've been looking at 4261 on the September contract. When you adjust this for the contract roll, so this B adjust button down here, if you click it, okay, so it's not on, you can see the gap up from the contract roll. So that's not a real gap up in the market. It's just that the futures contract has a higher price. The actual SPX market itself is not gapped up 50 points like that. So if you hit this B adjust button, it puts it where it's supposed to be. So you have a continuous plane here. And what that does is it changes our target on the ES continuous contract to the 4318 area, but if you subtract 50 points or so off of that, which is about what the contract change was, that puts us at 4260, which is our original target. So just so you know why we're changing the target to 4318, it's not because something has changed other than the contract has rolled on the futures market. Okay, so for the counts, off of this low, we were originally tracking this as a potential 1, 2, 3, or ABC. We were unsure based on this move up, but they did come back and break the pivot. And when they break the pivot, it is very unlikely that it will finish as an impulsive move. And they continued on down here to complete 5 down for a nice wave 1. And then we got a wave 2 bounce. Now this first initial move off of this high is not the most impulsive move. So it is kind of tracking as a diagonal, a leading diagonal for this wave 1 of wave 3. Okay, so this little wave 1 breaks down into 5 waves, and wave 1 of that wave 1 is what we're talking about. So this diagonal, okay, should target about 4490 to 4500 in that region, and then we would look for a pretty sharp retrace back toward about 4530 or so, and then we would look for the move to finish with a 345 to the downside, and that would put us in the 4474 to 4487 area, the 0.618 extension of the red wave 1 and 2, which are common wave 1 of 3 targets. So if the bears are going to take control, that would be the ideal path for them, is to push down into that area. Now, that doesn't mean we can't push higher. We can get a bigger ABC to the upside for wave 2, which would make sense given the kind of ugly look we have here. So that would look like a B, and then they'd make a C wave higher up in the 44 or 4550 area, 4560 area, and then we'd start wave 1 of 3 lower. So it is possible they can push higher. I would not anticipate that, but if they break 4540 or this high right here for wave 2, then I'd be looking for 4560. The bears really want to hold it under 4570. That's the 764. Above that opens the door to a leading diagonal for wave 5 of wave 3 to the upside. And that would look like this, where you have A, B, C for 1, A, B, C for 2, A, B, C for 3. Then 4 should be fairly deep back into this wave 1 territory. And then an A, B, C for 5 up toward this 4670 region. Back toward this high right here, this will be resistance. And after that, that would be a leading diagonal for a wave 1. And then we look for a pullback that needs to hold support from there to the downside. So if the bulls want to take back control of the market, they really need to push it over 45.70. That's going to be a key level to watch. If they can break above that, and that doesn't mean get to 45.72. I'm talking break above it like 45.80 and continue to push, then we are much more in line with a diagonal to the upside as opposed to this move down in C. But the move down in C is the expectation. It is the primary count. It is what I would expect to play out, and that is what we are tracking right now. So again, we are looking for a move down just below 4,500 or so, a bounce, and then 3, 4, and 5 down toward the 44.74 to 87 area. Then one more bounce in wave 2 of 3, and then a sharp move down that comes down into this support for wave 3 of 3, and then the pattern would continue on to 43.20, 43.18. Over on the NASDAQ, very similar counts. Off of the low, we still have that same ABC looking pattern. Okay, and then we have a nice wave 1 down, a wave 2 up, and they've already hit their 0.5 extension, so they do have enough depth on this 1 of 3. We would like them to see it push a little lower just to get the ES to where it needs to go. So down toward the low of this wave 1, which is about the 15,382 level, then a bounce, and then a strong move down towards 15,072. Another bounce, and then a move down towards 14,881. One more bounce, and ultimately down toward the 14,689 area, which when adjusted for contract roll puts us in that 14,400 to 200 area we've been talking about on the September contract after adjusting for contract roll. So NASDAQ looks very similar to the downside. Now to the upside, the NASDAQ will need to take out this wave 2 high. This wave 2 high is at the 618, so above that is going to get a little bit tough for the bears to hold. The NASDAQ is famous, though, for retracing very far in its wave 2s to near a few points of the previous high or low and then reversing. So it's not impossible for the bears to hold, but ultimately the bears really want to hold this wave 2 high. If not, they can open the door for the bulls to, again, have the 1, 2, A, B, C for 3, and then 4 and 5 up to the 16,400 or so area based on the contract roll. So if the bulls can grab hold tomorrow and push back over this wave 2 high, then we need to watch this B wave high. And if they break over that, it becomes very likely we're going to complete a leading diagonal up toward the 16,400 area. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, including trade alerts where we're absolutely crushing the market, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it and become part of our trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money, as you saw earlier today, as you can see by the testimonials, and finally understand the market so that when CPI comes in hot and the market goes up, or CPI comes in low and the market goes down, you understand why and what levels to watch. Elliott Wave is a powerful tool, and I teach it in a way that's easy to understand. It is 25 videos in 3 parts. The first part is your introduction, where you learn the expectations, your mindset, the KISS theory, and why Elliott Wave works. The chart setup and tools, where we go through every tool you need to put on your chart to confirm Elliott Wave patterns are playing out the way we think they should, as well as the Elliott Wave for Beginners online course. I go through every single Elliott Wave and what their targets are, what their failure points are, how they're supposed to look, how they're supposed to act, so that you can understand the market and where it's going to move to and when it fails, instead of trying to guess. The cool part about the course is it does come with both of my monthly plans. So if you don't want to buy the course alone and you want to become a monthly member, it is included for free in both rooms. The first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading, as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trades is so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Key takeaways for today. Really looking for continuation after a potential sharp retrace on the ES. So we're looking for a little bit lower than 4,500, right around that area, then a sharp retrace, and then on down in 3, 4, and 5 toward the 44.75, 44.87 level. If the bulls can push back over 45.70, we could see this leading diagonal playing out back toward the 46.70 overall area. Over on the NASDAQ, again, looking for continuation to the downside. NASDAQ does have a nice wave 1 of 3 in place. However, it can go a little bit deeper here. We'd like it to so ES can reach its target. Then we would look for a retrace and then down. If the bulls can push back over this B wave high, then they can create a leading diagonal to the upside back toward this high at around the 16.2 to 16.300, 400 area. Guys, that is your market update for today. I will talk to you tomorrow.